I do expect what is happening with inflation to continue to be a temporary phenomenon.
At the moment, and I completely understand why, the Biden administration is focused very much on its domestic issues.
The government should, I think, just try to get out of the way and not impede progress.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Sealing the deal, the German coalition leaders have signed the government agreement. Olaf Scholz will be sworn as a new chancellor tomorrow. Omicron leads to new curbs around the world. New York City calls for a private sector vaccine mandate, and France shuts nightclubs. And stay with Bloomberg Surveillance Early Edition. This hour we'll speak to the tech industry veteran Baroness Joanna Shields and the digital health pioneer Sigal Atzmon. Send in your questions on IB Plus TV Go. Now, first, let's check in on the markets. This is what we're looking at for the European stock 600, gaining some 1.6%. Of course, what we're looking at is firmly what we heard from China with the stabilization of the economy. Overall, this is what the European map looks like. So let's get on to the individual countries. Overall, futures are also climbing. Shares in technology are rebounding. I don't know if we have the European map. There you go. There you go. You can see a sea of green across the screen. Joining us with the latest on the markets is Christine Aquino and Lynn Thomason. Thank you both for joining us. Christine, when you look at some of the things that we're looking for, it's really China and the stabilization news that's coming from there.
Absolutely, Francine. And I think this is really bringing relief to a lot of investors right now because, it's the world's second biggest economy. And the fact that they're moving towards easing mode at the same time that the world's largest economy, which is the U.S., is moving toward tightening mode, it balances it out quite a bit, right? And so I think that's really calming down investors, especially after the week that we've had last week, where it was all about Omicron and all the fears that markets are attaching to the potential effects of that.
Lynn, what's on your radar?
Yeah, absolutely. I was just thinking, the China news is obviously a big factor in markets today, as well as interesting that's coming at the same time that Evergrande is kind of running out of road, and that whole, worries about the restructuring. What exactly is going to happen to Evergrande at the same time that the Chinese government is coming in and suddenly easing policy?
Christine, we're also seeing a bit of a rally in commodities. What's behind that?
Well, the China news is basically the tide that lifts all boats, Francine, and very much the commodity sector reacting to that China news. I think we spoke about how, earlier in the year, we've seen some curbs in the property sector in China, as Lynn mentioned, all related to risk related to Evergrande and the sector as a whole. But now we're seeing a bit of a shift in tone from the Chinese government on that front. And definitely, this sector, very much a user of all these raw materials. And I think what we're seeing in commodities and iron ore especially, very much a reaction to this mood in China where it's a bit more of a supportive environment for the economy as a whole.
Lynn, if you look at some of the, I don't know if there's individual stocks that we should be watching out for, but certainly, you always hear that everyone's buying the dip even after the Omicron concerns that we don't exactly know what we're facing. Is there too much buoyancy on the markets?
I mean, I think after a week like last week where you saw that such volatility, just running through the markets, and I think, in my sense, everyone's watching Bitcoin and what happens to crypto as a real, harbinger for the hot money and the speculation that's been in markets. Can that continue, or, are we at the point where some of that, hot money or sort of bubbliness of froth that we've seen starts to kind of fizzle out?
Christine, what are we looking for in Bitcoin?
Oh, well, I think what Lynn said, right? What are we not looking for? Exactly. I think it really is just an indication of, where market sentiment stands because, it's a high beta asset. It's a lot more sensitive to changes in risk sentiment than your regular stock market or credit market. And so, yeah, I think whenever we kind of see shifts in sentiment, Bitcoin is a little bit like the canary in the coal mine for all of that, right? And so the fact that we're seeing this revival, like 2 days after a massive flash crash, that just tells you where the market really stands right now, where I think it's ready to move on a little bit from the Omicron story for now and refocus on other catalysts such as China and also what we're going to see from big central banks next week because a lot of them are having their last meetings for the year.
Yeah, what I don't understand, Lynn, is that it seems that the market is thirsty for positive news, but at the same time they seem to be ignoring the inflation concerns that could come from Omicron and also some of the supply chain issues that could be exacerbated.
Yeah, and I think that's exactly right. And I mean, I think it's clearly the sense from today and really yesterday is just a sense of relief that Omicron perhaps isn't going to be as bad as we all feared, that things perhaps, the sell-off got too far last week, and you're just seeing quite an incredible, rebound by the dip working through in today's markets.
All right, thank you both for joining us, Christina Kino and Lynn Thomason. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour, we speak to the tech industry veteran, Baroness Joanna Shields, and to the digital health pioneer, Sigal Atzmon. Send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, some Evergrande bondholders have yet to receive overdue coupon payments by the end of a month-long grace period, signaling a possible default by the developer. That's as the company prepares for one of China's largest ever debt restructurings. So Bloomberg's Rebecca Chung-Wilkins joins us with the very latest. So what do we know about Evergrande and whether they'll repay or whether they're looking at a default?
Well, it does look like we are inching closer to what would be Evergrande's first default on a public bond with a missed coupon on these $2 notes as we come to the end of the grace period. Now, that's sort of significant because over the last few days, we have seen this ramping up of the crisis. It does feel like we're very much in a different phase. On Friday, of course, we saw this sort of barrage of statements from various authorities in China, as well as from the company, acknowledging that they may struggle to meet its debt obligations and that they are kind of looking for active engagement with holders. We also know that Evergrande is said to be planning this sort of comprehensive, holistic restructure on its offshore bonds, notably including both the public bonds and the private placement bonds. That includes this sort of opaque note that was guaranteed by Evergrande that actually has posed a sort of single biggest and most opaque default risk to the firm, this 260 million note sold by Jumbo.
So, Rebecca, what would an Evergrande collapse actually mean for China's financial markets?
Well, for all the kind of talk from authorities that Evergrande risks are contained and we're going to see this sort of ring fence, of course, we do know that large parts of China's credit market are under enormous stress. I think there's sort of two key things to watch. On the one hand, we're looking at the offshore primary market. Is this going to reopen for developers? With yields at around 22%, it's effectively prohibitively too expensive for many firms to borrow, and without access to that, it's inevitable that firms cannot roll over their debt, and we do continue to see the sort of wave of defaults. We've already seen 10 defaults from property firms since June, and on the other hand, we're also important to kind of keep an eye on the fundamentals here of property firm sales. Sales have been very, very, very weak, and without seeing some kind of improvement in sales, it's hard to see how property firms can really improve their financial health and improve the sort of long-term sustainability of many of these businesses.
Rebecca, thanks so much. Bloomberg's Rebecca Chung-Wilkins. Now, the U.S. and its European allies are also weighing fresh sanctions on Russia should President Putin decide to invade Ukraine. The sanctions could target Russia's biggest banks, including the Direct Investment Fund and the country's ability to trade currencies. Well, joining us now to discuss the escalating tensions is Bloomberg's executive editor for international government, Ross Matheson. Ross, always great to speak to you. So this is basically trying to convince Putin to stand down and not do anything with Ukraine. But are these sanctions good enough to persuade him, or is it going to be something else that will make him change his mind?
Well, certainly they will be some of the most severe actions against Russia's economy that we've seen so far, penalising banks, trying to contain it from the financial system. But unless it's the nuclear option of cutting them out of the SWIFT payment system, then really it's probably something that Putin would say the Russian economy can weather, given the fallout elsewhere. But really, is it about the stick or is it about the carrot? The stick may not go down so well with Vladimir Putin when the US president talks with him today. It might be more the carrot that he's after, which is the incentive of a promise of a full sit-down summit again in person with Joe Biden, perhaps in the early part of next year. And that might be something that the US president can offer him, as he did in April, of course. They met in June after the prior troop build-up on the Ukrainian border. So it might be that he says, look, I'll meet with you again if you agree just to stand down again. So we'll see a repeat of what we saw earlier this year.
So, Roz, what do we know actually is Vladimir Putin's intentions? I know this is, probably the most difficult question of the year. But is it international attention? Is there something that he's going to speak with Joe Biden today? Is there something that he needs from the US and the president?
Well, he's going to ask for security guarantees, both from the US and from NATO, which is something that's impossible, really, for NATO to give. But what he seems to feel fundamentally, aside from the question of Ukraine, is that he sees NATO encroaching on his western borders. They're pushing outward from Europe and towards him, and they're engaging with countries from Ukraine to Lithuania to others. And he's saying, well, hang on, you need to push out of my backyard. I want guarantees that NATO is going to stay out. And that's certainly something that NATO itself won't promise. But he seems to really feel that fundamentally, so it's certainly something he's going to at least ask for when he meets the US president this evening via video conference.
Roz, thank you so much for the update. Roz Matheson there, executive editor for International Government. Now let's get straight to the Bloomberg First Word News. Here's Max Ramsey. Hi, Max.
Morning to you, Francine. New York is to become the first US city to impose a vaccine mandate on private sector workers. The mayor's office says 184,000 firms will be required to enforce the rules, with vaccines needed by December 27th. Partnership for New York City, a business group, criticized inconsistent rules at federal, state and city levels. Here in Europe, France is to close nightclubs for 4 weeks and is advising working from home. The UK, meanwhile, says 336 cases of the Omicron variant have been detected and that it's present in regions across the country. Bloomberg News says it will continue to do all it can to help staffer Hayes Fan and her family 1 year after she was detained in China. Editor-in-Chief John Micklethwaite says 12 months of detention is a long time for anyone to endure, and the company remains very worried about her well-being. Chinese authorities have said Fan was detained on suspicion of national security law violations and that her legitimate rights and interests are fully guaranteed. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Max Ramsey. This is Bloomberg. Francine.
Max, thank you so much. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour, we speak to the digital health pioneer, Sigal Atzmon. Up next, tech industry veteran Baroness Joanna Shields joins us. Send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Benevolent AI, a British startup that uses artificial intelligence to develop drugs, is going public via a Spac merger with Odyssey Acquisition, a €300 million blank check company. The deal actually values Benevolent at €1.5 billion. Odyssey was listed on the Euronext Amsterdam exchange in July, and the deal highlights the growing popularity of SPACs in Europe, while blank check fervor in the U.S. cools. Well, we're joined by Baroness Joanna Shields, Chief Executive Officer of Benevolent AI. Joanna has over 25 years' experience building and scaling global tech companies, including Facebook, Bebo, AOL, and Google. She previously served as the UK Minister for Internet Safety and Security. So, Baroness Shields, thank you so much for joining us. First of all, I know you've been building this company, and now comes a SPAC. So, what was the most difficult in this time-consuming and extremely difficult thing you've achieved?
Well, we've been heads down building this company. I joined almost 4 years ago, and it is a very complex problem that we're addressing. It's, how do you give scientists insights into disease biology? So we set out to ingest vast quantities of data and enable scientists to run AI machine learning algorithms across them to make better decisions in the early stages of drug discovery, which lead to higher confidence, more efficacious drugs down the line. So we're de-risking drug development down the line using AI and machine learning.
And this is, I actually had a similar conversation with the founder of DeepMind. Actually, that was going into foray, and biotech and biology in general is something that they were also interested in. Joanna, does it make the drugs safer sooner, or does it just find the possible combination? Because of course, the drug development is you find the drug, but then you have years of trials.
So one of the reasons drugs fail is that you choose the wrong target from the outset. So what our system enables scientists to do is have a view into the network biology that is underlying a disease, understand the mechanisms and the drivers, and then be able to pinpoint that with precision to the very patients that may respond to that drug, as well as incorporate things like target progressibility, like safety and tolerability, into the early stage decisions. So if you make the highest quality decision when you select a target and you have the experimental data to back that up, then you're in a much stronger position as you develop a drug and take it into the clinic.
So, there's a lot of questions about AI regarding data and how, the use of that data is. And the other question is, of course, what do you choose to put your focus on? So is there a specific kind of, group of drugs that you want to try and help with as, in the next couple of years that you haven't done so far?
So there's been a tide of innovation in gene therapies and monogenetic diseases, but what we're focused on are these complex multifactorial diseases where the mechanisms of action are poorly understood. And that's where AI and machine learning can really contribute, valuable insight. So what we've been building over the past 5 years is this knowledge graph that enables scientists to have a view inside biology with proprietary insights that aren't available elsewhere. So they can make higher quality decisions based on this unique corpus of proprietary insights that we've derived using AI and machine learning over such a long period of time.
Which is, incredible. What do you need from regulation to actually be able to do this the right way? Is there a danger that a lot of AI used for drug making, but also elsewhere, will become the technology companies of 10 years where actually, people mistrust them? So what do you need to do now to make sure that you're trusted in 5-10 years?
So we focus on proof points. So everything that we have a very high bar in terms of, accepting a drug into our portfolio. And we do that with high confidence. It's based on data. So it's all about the proof points. So as you move through the stages of drug development and you get to where you need to design and synthesize a molecule, we also add AI and machine learning there to optimize our drugs. And then when you get to the clinic, it's basically traditional, process, because when you're putting a drug into a human, you cannot take risks. So we have a lot of innovation up to that stage, and we may be able to better target the right population of patients, but using our AI and machine learning workflows. But when you get to the clinic, it's strict. The regulations apply, and we're a traditional drug discovery company at that stage.
Yeah. Baroness, are you happy with the valuation that you got? I know it was short of some of the expectations that there were around 2-3 years ago.
Well, there was a reset point when I joined, and I feel like we have built this company to a very strong valuation at this stage. Odyssey, we're looking for the best company at the nexus of AI and healthcare, and we fit the bill. So I feel like it's a strong proposition for investors. There's a lot of room to run. If you look at our comparables, we are unique in that as a company, we have, scientific proof points and 20+ drug programs in our pipeline and partnerships with companies like Astrazeneca and Eli Lilly. And we're excited that Astrazeneca has taken a stake in the company as part of the concurrent pipe that we raised. So I really feel like there's a lot of room to run here, and it's a great value for investors.
Why did you go down the Spac route?
It was really, it was kind of serendipity that we met the team from Odyssey. They had been doing this process in their own, concurrent process, and they had identified Benevolent AI as, the best company in Europe at the nexus of, as I said, AI, machine learning, and healthcare. And they approached us, and we really felt like it was a fantastic opportunity collaboratively with them and in raising the pipe. And we are fortunate to have Dr. Olivier Brandicourt, the former CEO of Sanofi, join our board, as well as Jean Raby, the former CEO of Natixis. So I think this has been a mutually beneficial and fantastic partnership so far. And they've been great advisors, along with the team at Goldman who supported us throughout this process.
Thank you so much. Johanna Shields there, the Chief Executive Officer of Benevolent AI, joining us this morning on the recent SPAC. Now, let's also check on the markets before we go. A lot of the focus is on what we heard from China. The focus, of course, is on stabilizing the economy, and that's giving a nice little lift to a lot of these stocks. Futures also climbing in the U.S. Technology shares are looking at a rebound. Risk assets recovering this week after initial data showed that the surge in Omicron cases has not overwhelmed hospitals so far. We did also have an easing of Chinese monetary conditions to shore up growth, should also offer some, I guess, help or some comfort for markets that have been whipped by bouts of volatility. Now, coming up, we'll also be speaking with Helen from Pantheon International about the outlook for the private equity industry. Send in your questions on IB Plus TV Go. We look at technology stocks selling off last week after a combination of concerns about the variant and the Fed, of course, hawkish tilt. Now that seems to be stabilizing. This is Bloomberg. Sealing the deal, the German coalition leader signed the government agreement. Olaf Scholz will be sworn as a new chancellor tomorrow. Omicron leads to new curbs around the world. New York City calls for private sector vaccine mandate, and France shuts nightclubs. And stay with Bloomberg Surveillance Early Edition. This hour we'll speak to the private equity with Pantheon Ventures partner Helen and to the digital health pioneer Sigal Atzmon. Send in your questions on IB Plus TV Go. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So first of all, let's check on the markets. A lot of the support we're seeing across equities is because of the China news that we had from PBOC saying they will help stabilize the economy. That's giving a nice little lift to, of course, everything from equities to treasuries. After the sell-off that we saw on Friday, everything seems to be a lot more stable. Nasdaq Futures gaining 1.7%. And travel and leisure, one of the biggest gainers across, with commodities that are one of the ones that got the big boost. For example, iron ore gaining some 8%. We're also looking at live pictures from Berlin, where leaders of the newly formed German coalition are speaking. It's available on LiveGo, giving us a good indication on one of the challenges that the new chancellor sees going forward. Now, the number of publicly listed companies globally is falling, with private equity becoming more popular. Within the private equity space, co-investing, where investors can take minority stakes in a company alongside a fund manager, is becoming increasingly popular. Now, those are the findings of Pantheon International, a private equity fund of funds with $77 billion of assets under management. Well, Helen is a partner in Pantheon's European investment team. She's also co-founder and board member of Level 20, a nonprofit that encourages women to succeed in private equity industry. And she joins us now. Thank you so much for joining us. Helen, when you look at some of the findings and what you are able to tell us, what was the most surprising thing?
Well, I think probably the most surprising thing is that this trend has been going actually now for more than 20 years. You know, the shrinking of public markets is a well-documented phenomenon now. And our most recent research found that even in the last decade, the number of public companies has been reducing by about just over 2% a year, whilst the number of private equity-backed companies has been increasing by just under 6%, 5.7% per annum. So, you know, an ongoing trend.
Helen, how are you approaching co-investing? And actually, how's the private equity changed because of the search for yield and just so much cash washing around?
Yeah, well, I think, you know, the search for yield is a huge thing. And clearly, private equity has been a beneficiary because investors of all shapes and sizes are looking for, you know, for better return on investment. So that's attracted a lot of capital into the industry over the last sort of 20 years. You know, assets under management now in private equity are over 5 trillion. However, the number of opportunities continues to rise. So private equity has moved much more into some of the really attractive sectors: information technology, tech enablement, healthcare, sustainable investing, and all of that has created more opportunities. Talking about co-investment, co-investment is a very attractive thing to be doing because we can invest alongside some of our best private equity managers across the world. We can select the assets.
So first of all, is the industry as a whole over leveraged? And what happens when we have inflation, staying higher that actually leads to a monetary policy normalization? Will it hit private equity hard?
I think private equity has learned a great deal over the last sort of 15 years since the financial crisis. And private equity firms are a lot better positioned than they were 15 years ago. So much more expertise centrally in private equity firms to cope with much more difficult conditions. We saw that last year, actually, with the COVID crisis, where private equity reacted very fast. And a lot of people thought that private equity-backed companies would get into trouble, but actually the rate of defaults was really pretty low. And there is this myth out there that private equity is over-leveraged. However, as I mentioned before, a lot of private equity firms are now targeting much higher growth sectors, and they don't put a lot of leverage on the businesses because they don't want to stymie those businesses' growth.
How do you think the pandemic has changed private equity? It's pretty incredible over the last couple of years. A lot of private equity groups seem to be buying companies but holding on to them a lot longer. Will this trend continue?
Yeah, I think it could continue. Private equity has always been about long-term investing and about intelligent capital. So it's not just about the money they put into businesses, but it's also about the expertise they bring to it. And I think that was really put to the test in COVID. You saw private equity firms really deploy a lot of expertise in supply chain management, getting companies digital more quickly, and looking after their staff and the local communities. So I think a lot of learnings actually from the crisis, and private equity has actually come out of it relatively unscathed.
What do you think is most exciting in the private equity space right now? It seems like there are so many industries that haven't been touched. Is there anything, that hasn't been touched or that will actually revolutionize the way we look at things?
So I think private equity thrives actually on disruption and desiccation, and we've certainly seen a lot of that over the last 18 months. So I think not just information technology as a vertical, but technology disrupting every other industry sector, enabling other sectors is and will create even more opportunities for private equity. So we're investing in all sorts of tech-enabled businesses that touch financial services, touch the consumer, even industrials. And I think private equity is extremely well positioned to take advantage of those opportunities for the next, the next little while.
So, Helen, what would be your ideal potential target? What do you look for in a company?
So we look in a company, we're looking for various different sort of value creation levers. So, not just one, but multiple sources of potential growth in the future. We're looking for managers that are very well aligned. So part of the sort of secret sauce of private equity is extremely good alignment between company management and the investors. And we're looking for a business that can grow fast and has multiple sources of exit as well. So companies that can exit through sale to a trade buyer, maybe in 5 or 6 years' time, or to a larger private equity fund, or if they grow fast enough, potentially even an IPO. So we're looking for sort of lots of optionality there, but companies that have got the ability to grow and actually, create good around them as well. I think, one thing that's maybe not so well known is that private equity-backed companies not only grow faster on average than the older sort of public companies, but also create more employment. So that's an additional benefit.
Helen, I know you've done a lot of work on diversity and, of course, inclusion in the private equity space. Private equity 2-3 years ago was probably, the part of the financial sector group that was the most behind. How much advanced have they become, or how much more efforts do they need to do?
So in answer to the first question, I think that quite a lot has been done in the last 5 years since we co-founded Level 20. That was in 2015, in fact. So I think there's now a much greater awareness of the advantages of greater diversity in the private equity industry. I mean, this is an industry which thrives on performance and thrives on making the best investment decisions. the best investment decisions are made by a diverse group of people, so avoiding groupthink. And I think that the private equity industry has realized this, and a lot more is being done now to encourage a much more diverse set of candidates to come into the industry and also then to be supported and to progress in the industry. So we came from a rather low base, and when we started level 20, only 6% of senior positions in private equity are held by women. It's getting better, but it's a long road. You can't change these things overnight.
Helen Steers, thank you so much for all of your insights, the partner there at Pantheon European Investment Team. Now, we're also looking at Germany, where the coalition is actually giving its first press conference. We're seeing live pictures from Berlin. The newly formed German coalition speaking. We, I think, heard from Mr. Scholz, the new chancellor, that his first official trip will be to Paris. There's also a lot of questions that he's trying to field on COVID, the Omicron variant, and some of the potential lockdowns that we could see at Christmas. Coming up, Smart Conversations continue on Bloomberg Surveillance Early Edition. Up next, we speak to the digital health pioneer, Sigal Atzmon. Send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now on to Omicron watch, and new restrictions are showing up all across the world as authorities try to stem the spread of the Omicron strain. France shuts nightclubs. New York City is calling for a private sector vaccine mandate, and the Chinese port of Ningbo has also closed some schools. Well, we're also joined by Medix founder and Chief Executive Officer Sigal Atzmon to talk us through about what she's seen and what we should go looking forward. Sigal, thank you so much for joining us. I know you've been watching Omicron, being a founder, of course, of Medix. What is the one thing that you've been surprised about? We don't know much about Omicron, but are we dealing with it in the right way, given every country seems to be going at it alone?
Well, first of all, thank you, Francine, for having me. It's a big pleasure. And yes, we've been watching the Omicron, and clearly, I think the first surprise was the very fast reaction. So we got the information from South Africa really good, which was a very promising move, because previously, if you take years ago, it would take us a long time to get the relevant information. And then the world acted really fast, maybe over panicking a little bit, taking very strict actions. We've seen Austria locking down completely. And what we see in different countries that are maybe more advanced or have more cases is that it's very contagious, probably more contagious, but not very virulent, meaning the disease that people who are vaccinated might get is not very severe or doesn't lead to many hospitalizations as of yet, which is good news. But, and the big but is, we must get vaccinated.
I was going to ask you actually about vaccinations, because a lot of people say, well, you know, with mutations that come up every second, that maybe vaccines are not the solution. Do vaccinations need to be mandatory to make a difference?
So first of all, the vaccination is a great news, and it has helped and saved so many lives. And to be honest, I say yes to vaccinations. I say yes to green passports, but I also say yes to freedom. That means that people should be able to choose whether they want to get vaccinated or not. I don't think it's constitutional in many countries to force vaccinations. However, if you choose not to, then you may have to stay at home, because I also say yes to social responsibility. And social responsibility means we care for our families, for our friends, and our communities. We care about public health. We need to protect it. Hence, if you don't want to get vaccinated, you will have to stay home. And I think that's fair. It's a right balance between freedom and doing what is right.
Sigal, talk to me a little bit about Medix. I mean, this is basically a company that, you know, has become pretty big under your watch, and it kind of, you know, it changes the way that you wanted people to access medicine and doctors. So how much bigger do you think you'll be, and has a pandemic changed the way we interact with our doctors and how we you know, go and see them?
So thank you. It's a great question because the pandemic has completely changed how we consume and are provided medical services. And it's been a great opportunity for Medix. Medix is working over 90 different countries, servicing millions of patients and customers around the world with offices in 13 countries. So through this pandemic, we are on the ground and we see what's going on, different cultures, different places, cultures, and we actually see two trends, main trends. One is digital health has become the norm. Yep. People are easily going and choosing digital health. Mental health has also become a very strong focus point. Governments, different stakeholders, employers, everyone is actually pitching in. If we look at governments, new budgets, new collaborations. Yeah. Yes, please.
And I was going to ask you, actually, does the social contract change between citizens and a lot of the governments in place because of the pandemic? And what does that mean for health insurance, and again, the way that governments pay for this?
Absolutely, there is a change. I mean, the expectations have grown huge. People know that they deserve more today. They want prevention services. They want accessibility. They want healthcare democratized. Their expectations from the government are bigger, from their employers as well. So employers understand they have to become ambassadors of good health, and they have to drive new benefits for their employees. They have to allow them accessibility and affordability of better medical care. Doctors realize that they have to go on tech. Investors look more and more into the healthcare tech. We invest in digital health solutions that drive this accessibility and that democratization of healthcare. So the contract between everyone and everyone has really changed, and for the better. We see better medical outcomes, more affordable care, and more accessible.
I mean, I was going to ask you actually about the affordability of some of the care that we're seeing. Does the pandemic drive prices up? Because a lot of, the maintenance or a lot of the operations that should have gone ahead have now been rehalted because of Omicron in a lot of places around the world.
So I think it will drive, it already drives prices of healthcare down, actually, because accessibility can so healthcare can be accessed through digital tools. You can go online on your mobile app or on a call or on a chat and speak with your doctor, with your nurse. You don't always have to go for follow-up consultations. You can consult with world-leading specialists remotely. Medix provides that. Different platforms provide that. Governments support that. Employers are looking for that. So yes, we have all together to work to reduce the price of healthcare, and that only can work through tech and through, again, new focus of the governments on new budgets to support those tech companies, improve the regulations, and make accessibility a priority today.
Sigal, thanks so much for joining us today. Sigal Atzmon there, Medix founder and chief executive officer, joining us this morning on Omicron and also the new relationship between governments and citizens when it comes to healthcare. Now let's get to your Bloomberg Business Flash. Here's Max Ramsey. Hi, Max.
Morning to you, Francine. Some Evergrande bondholders have yet to receive overdue coupon payments by the end of a month-long grace period. Two holders of the dollar notes sold by an Evergrande unit have told Bloomberg they hadn't received the payments as of 5:30 a.m. this morning, London time. S&P says default now looks inevitable. A group led by BlackRock has agreed to invest $15.5 billion in Saudi Aramco's natural gas pipelines. The group will buy a 49% stake in a new entity called Aramco Gas Pipelines, which holds a 20-year leasing right for the network. The plan is part of Saudi Arabia's efforts to open up to more foreign investment while using the funds to diversify its economy. Tesla shares reversed early losses yesterday, shrugging off a Reuters report that the US SEC has opened a probe into defective solar panels. A whistleblower says Tesla failed to notify shareholders and the public of fire risks associated with the problems. The company didn't respond to emailed questions from Reuters. And that's your Bloomberg Business Flash. Francine.
Max, thank you so much. Coming up, Germany's Social Democrats, Greens and Free Democrats signed a coalition agreement clearing the way for Olaf Scholz to become the country's next chancellor. We have all of the latest from Berlin next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Germany's Social Democrats, Greens and Free Democrats have signed a coalition agreement sealing a deal for a new government to take office this week. The new coalition is headed by Olaf Scholz of the SPD, who is to take over as Chancellor as Angela Merkel bows out after 16 years. Well, Bloomberg's Patrick Donoghue now joins us from Berlin. Patrick, good morning. So Olaf Scholz due to be sworn in tomorrow. What are the immediate issues that his government will need to tackle?
Well, Germany is, of course, engulfed in a huge surge in COVID infections, the fourth wave, as it's called here. And so that's going to be the first order of business. Until very recently, Scholz was under a bit of pressure for saying very little. He was in coalition talks to form the next government. As these infection numbers began to rise dramatically. And so he's come out swinging in the last week or two, saying that he wants, he's going to push for 30 million vaccinations by the end of the year. And at the same time, it's a struggle with the German chancellor because you have to deal with German state leaders on the state level to try to get a uniform response to the pandemic. So that's going to be his first order of business.
Patrick, in terms of policy, do we expect Olaf Scholz's leadership to be a simple continuation of the Merkel era, or how much will he put his own stamp on it?
It depends on what policy you're talking about. I mean, he's in a coalition now with the Greens, with the FDP, so there's going to be a lot more of an ambitious push on the climate agenda for sure. If you're talking about foreign policy, the short answer is yes. I mean, it's going to be a continuation of Merkel's policy. Scholz has not really divulged much in terms of new accents, new tones. He's speaking right now at a press conference, as you see, and the first questions to him were, will Germany follow suit with a diplomatic boycott of the Winter Olympics in China? He didn't answer that. Another one was Russia, Nord Stream. He didn't answer that. He's not saying much. He's going to be sworn in tomorrow. In 24 hours, he'll be chancellor, and basically, we'll learn more then.
Yeah, I hope we do. Patrick, what's his biggest challenge, or what's the most difficult for him, thing for him to actually talk about? So is it, the government attitude towards Russia on foreign policy, or is it really domestic, how you deal with inflation, and how he keeps COVID under control?
Well, I mean, all three of those. I would say, if you're talking about foreign policy, he has been pushed on Russia because Angela Merkel came from a different political camp with respect to Russia. The CDU, the conservatives, tended to be a bit more skeptical. In Germany, of course, the Social Democrats have in the past tended to be closer to the Kremlin, by Western European standards. Scholz has not given much indication on what he will do differently, particularly with respect to the threat level, the risk of troops amassing on the Ukrainian border, the realistic threat of an invasion. He hasn't said much on that, so we are pushing hard to try to see what's going to be different.
All right, Patrick, thanks so much. Bloomberg's Patrick Donoghue there in Berlin. Now, this is what the markets are telling us. They seem to like the stabilization message coming from China equities, seeing a nice little lift across the board with the Stoxx European 600 gaining some 1.7%. The other thing I'm looking at is, for example, travel and leisure, one of the biggest gainers in terms of industry, but we're also seeing a bit of a commodity rally. Technology shares leading the gains. Chinese tech stocks also rebounding from last week's rout, while with Alibaba, for example, soaring by the most since its 2019 listing in Hong Kong. Bloomberg Surveillance Early Edition continues in the next hour, and this is Bloomberg.
You cannot put all your eggs in that China basket, which everyone thought was such a valuable basket.
We are in a boom economy, but what we're also dealing with is a variety of challenges.
It's really compelling that we can still see strength from corporates and strength in those corporate balance sheets to really carry stock markets higher over the course of the next year.
Never underestimate corporate America.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Tuesday, December the 7th. Our top stories today. The video superpower summit. Joe Biden plans to warn Vladimir Putin not to invade Ukraine. The U.S. and its European allies are considering sanctions on Russian banks if Putin ignores that warning. China's policy pivot. Traders want to know how far Beijing plans to go as the central bank shifts towards easing. And trying to stop the spread of Omicron from New York to China, authorities are now imposing new restrictions. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards, live here in London. And Kailey, it seems the markets are saying this morning, variant, what variant? We buy the dip regardless.
Oh, yeah, a lot of dip buying going on this morning, Anna. Broadly a positive day in Asia overnight. Most of the major equity benchmarks were in the green, but the rally really was led specifically by Chinese tech stocks. The Hang Seng Tech Index actually rose more than 4%, and the big outperformer within that was Alibaba. Remember, Alibaba closed on Monday at an all-time low, and then today, Tuesday, had its best day of gains since its Hong Kong listing back in 2019. The stock up 12%. This is really a story of sentiment improving because of policy easing with that triple R cut from the PBOC in China yesterday. Now, we also got data from China overnight, imports and exports at a record, and it also showed that Chinese imports of iron ore were at the highest in more than a year. So that was reflected in a big boost for iron ore futures, up 8% in Singapore. And then just one other story to note was Australia, the RBA leaving policy unchanged and saying that they don't see the Omicron variant denting the recovery at all. And as a result, 5-year yields in Australia up 8.5 basis points to 135. Now, here in the U.S., we did see that dip buying taking shape yesterday, and the gains are continuing this morning. S&P 500 futures right now around session highs, up 1.2%. And in the bond market, we are basically back to where we were pre-jobs report last week. We saw 9 basis point move to the upside yesterday. This morning, up about a basis point on the U.S. 10-year yield, so we're back to 144. And then 2 commodity stories to note, one being oil. Second day of gains. It is heading for its best 2 days since all the way back in August, up 2.7% this morning after a near 5% move yesterday. WTI trading back above $71 a barrel. And the natural gas futures hit their lowest since July yesterday. The weather this December, a lot warmer than was anticipated, but you're starting to see a reversal of yesterday's move. Those futures up 3.4% at this point, Matt.
All right, well, we are getting some breaking headlines out of Europe this morning, Kailey. We're looking at ZEW. Expectations that are higher than the survey had predicted. So 29.9 is the level on ZEW. We're getting GDP for the euro area up to 3.9%. We were only looking for 3.7%. So this should just add to the rally that we're seeing here in Europe. You can see, especially in the core here, Germany and France, the green is as bright as my tie. I mean, we're really up this morning, 2% and change in a lot of these indexes. In fact, if you take a look at the Euro Stoxx 50, which is kind of the blue chip index of the European area, you'll see a gain of more than 2%, 2.4% right now at 42.34. So big, strong rally. We are seeing a drop in Astrazeneca. Just wanted to point this out to you because it's the biggest loser on the Stoxx 600. As it prepares to buy a drug for as much as $3.6 billion, including all the royalty payments and milestones that had to be met. So that's why that stock is coming down. But otherwise, we're flying high. The euro is off right now, 0.1%. We saw the dollar just about an hour ago spike up, bringing down the euro and the pound, but it hasn't weighed on the gains that we saw in oil. You just saw crude there up in the U.S. It's up here as well. Big gains, about 2% and change. And Bitcoin is also up 2% and change. Right now, 51,248. So it is a risk-on environment, Anna.
Yeah, absolutely risk on. Very appropriate to be wearing the green tie then as a result. Now let's take a look at what is coming up ahead for us today. We start with some data at 8:30 a.m. New York time. We'll get economic data on the U.S. trade balance. Supply chain disruptions and congested ports continue to make it difficult for U.S. importers, of course. We've already had trade data out of China in the last 24 hours. We'll also be following the billionaire money manager Jeffrey Gundlach as he speaks on a webcast for his double-line total return bond fund at 4:15 p.m. New York time. He's recently been fairly critical of the Fed's ability to keep inflation within target. And the main event that we're watching then today on the geopolitical front, President Biden and President Putin, they will hold a video call today. The two leaders set to discuss the tense situation in Ukraine as Putin builds up troops on the border. And let's stick with that part of our conversation this morning. The US and Europe are considering tough financial sanctions against Russia if Vladimir Putin invades Ukraine. Bloomberg has learned that Russia's largest banks would be targeted. President Biden may spell out the sanctions today in his video call with President Putin. Joe Matthew, Bloomberg Washington correspondent, joins us from New York today. Joe, good to speak to you. What do we know is the extent of the pressure that the Biden administration wants to put on Russia?
Well, this is going to be an interesting conversation here. It's certainly not the first, and it's an opportunity for both countries to lay down some thoughts here. There's a lot on the line for both of them, and President Biden, to your point, could be explicit this time in his warnings against Russia invading Ukraine, not only threatening the banking sanctions that we've learned about at Bloomberg News, but also a couple of other ideas here, making it difficult to convert currencies. Maybe they'll lean in a little bit more on Nord Stream 2 and express U.S. opposition to that plan here. But we could also argue that Russia is already getting some of what it wants in this very meeting. They're getting this today just by having the meeting with Joe Biden. It's the fourth go-round for these two leaders here, something most world leaders cannot say when it comes to the American president. And so it's really no surprise to see the Kremlin actually ratchet up expectations instead of normally the gaming of expectations that we see before a confab like this, where they're lowering the bar on deliverables. They've shown that this is a big deal for Vladimir Putin. As I mentioned, it'll take place 10 a.m. Washington time, which will be late afternoon today in Russia. We'll see what the readout is from both countries after that meeting.
All right, Joe, so President Biden is focused on foreign policy. Congress is focused on a very long to-do list, including figuring out the debt ceiling and getting a defense spending bill passed. Now they're thinking about tying those two things together?
Yeah, this is interesting. Chuck Schumer and Mitch McConnell have been doing a lot of talking lately. These are two guys who have been very quiet about this. And if you remember the last time we walked up to the cliff, if I can call it that, when it comes to the debt ceiling here, there was a lot of squawking from Republicans. Mitch McConnell was out every day saying that we're not going to have any part of this. Democrats are in the majority and they're on their own. These concerted conversations are making us wonder what kind of form this might take here. And there is a thought that it would be attached to a national defense spending bill. It's an annual process that's well underway right now. And it's an opportunity for Democrats to say, OK, Republicans, we dare you to vote against funding the military while we're at it here with the debt ceiling.
All right, Joe, fascinating stuff. Joe Matthew is the host of Sound On. You can listen to his radio program every weekday at 5 p.m. Sound On, 5 p.m. Eastern Time on Bloomberg Radio. In China, exports and imports set records in November. Trade expanded faster than expected ahead of year-end holidays as domestic power crunch eased. The data comes as China's policymakers move to expand support for the nation's economy. And this is really driving the markets today. And we know that they were waiting for it. Now traders are buying on it. Enda Curran, Bloomberg Chief Asia Economics Correspondent, tell us about the RRR cut.
Well, look, the RRR cut will free up about $190 billion for banks to lend into the economy. Matt, the idea is that it might flow through to those smaller and medium-sized businesses that need it most. It's clearly, on a headline basis, quite positive, but it's not a game changer when it comes to the stimulus story. It doesn't bring down the cost of borrowing, and the economists are saying, look, there's going to be more support needed to turn things around, given the slowdown that's coming out of the real estate sector, like you mentioned earlier. But there was some good news on the economy. As you were saying, exports continue to go gangbusters, despite all of the headwinds from supply chains and tariffs and everything else. That does reflect the year-end holidays demand. It does reflect the better energy story in China itself. But it's proving to be much more resilient than thought. And just on the import side, I should say, imports looked quite robust going into China too, but actually that's less about consumer demand and more about high prices for goods, for commodities coming in. So it's good news on the trade side of things overall, but the real story remains on real estate.
Well, yeah, if real estate is the problem child, within the problem child is Evergrande. And we understand that they have the grace period now over for a couple dollar bond payments and that those creditors have not been paid. What happens next?
Yep, so it is a clock watching day. Everybody's waiting for news to see if those payments are made or not. But I think, the bigger picture here is really that the company's all but signaled itself it's going into a restructuring process. That's all of the expectations for everybody watching this. Remember, as you say, the government has been clamping down hard on risk in the financial sector, That's pushing these developers over the edge, or risks pushing them over the edge, and now the authorities are kind of trying to balance things a little bit without, they can't allow these developers to fail outright, but also they can't afford to completely bail them out either. So we're looking at a muddled middle where there will be some kind of a complicated restructuring process for the company's debt. One would imagine, or the expectation is that on the ground, the real economy will be protected. So if you've paid for a flat to be built by Evergrande, you're probably in the running for that to be made whole. But if you're a foreign investor who lent money to Evergrande at a high yield, you're probably due for a haircut. And I think that's what everybody's waiting for clarity on right now. And we expect to get details after that restructuring over coming weeks.
And thank you very much. Bloomberg's Enda Curran with the latest then on those China themes. Over to Europe now, and EU health ministers are gathering in Brussels to discuss easing the travel curbs that the bloc's nations have imposed on southern Africa in response to the Omicron variant. Bloomberg's Maria Tadeo joins us from Brussels with more. So it's an interesting story we're telling here about what's happening at a European level then, Maria, because on the one hand, yes, discussing whether to ease some of these travel restrictions, but on the other hand, nations putting in place their own increasing levels of restriction to try and curb the existing Delta variant before we talk Omicron.
Yes, Anna, you could argue a lot of this is whiplash, but actually what they say is that this makes total sense. This variant is probably already in Europe and has been for longer than we expected or anticipated initially. So a lot of these travel restrictions are probably useless at this point. The focus is containing the virus in Europe, particularly, Anna, at a time of the year where we're heading into Christmas. And we hear this thing repeatedly across European governments. We have to save Christmas. We know that experts hate the expression, but for governments, this is politically very sensitive. They want people to go home, get together, have a nice Christmas, but also be able to return home safely and back to the office in January. So this is a big political test this Christmas season, particularly for the French. As you know, there's an election coming up and it's already quite heated.
What about here in Germany? Olaf Scholz just holding a press conference, essentially saying there's nothing they can really do to stop Vladimir Putin. What do we expect from his new coalition coming into office tomorrow?
Well, you know, Matt, it's now almost officially a done deal. There is a government in place in Germany. And of course, it's this three-way coalition. In many ways, you talked about foreign policy. There's big questions about Nord Stream, what happens there, Russia, China, the German economy. But you could argue a lot of this will be focused initially on the pandemic. And there's a new health minister who I'm sure you know very well, is very popular, very famous in the German media circle, who has been very outspoken about the fact that he is in favor of vaccine mandates, that he is in favor of restrictions, and he is in favor of potentially, if needed, targeted lockdown. So a lot of this does show that Olaf Scholz has gone for someone that is very hawkish on the corona front.
All right, Bloomberg's Maria Tadeo, thank you so much. And a headline just crossing from Olaf Scholz saying he is monitoring the situation in Ukraine very, very closely. All right, now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. A big one to the upside is MongoDB. Of course, this is a database provider, infrastructure software company. It reported yesterday revenue that topped expectations, and its revenue forecast also topped expectations. So as a result, that stock is up nearly 21% in pre-market trading. Another stock moving to the upside is Intel, and this is after its self-driving unit Mobileye. The company said it will plan to go IPO, take it public in mid-2020. Or 2022, excuse me. So analysts really positive on that idea, and investors seem to be positive as well, with that stock up about 8% in pre-market trading. And one final mover to the upside is Apple. This is after an analyst at Morgan Stanley popped a street high price target of $200 on the stock, saying that it will benefit from a flight to quality. Also really positive on virtual reality for this company. That stock trading at $168 this morning, up about 1.8% before the bell, Anna.
Yeah, really interesting how some of those big tech names have pulled back quite considerably in recent sessions. Apple, not one of them, Kailey. Now, coming up on the programme, the Everything Rally. We will discuss the recovery in risk assets with Kokou Agbo-Bloua, Societe Generale Head of UK Research. We'll also speak to Julie Norman, lecturer in politics and international relations at UCL. She'll be weighing in on Biden's diplomacy, international relations to the fore on the US-Russia front and also US-China. This is Bloomberg.
Welcome back to Bloomberg Surveillance. I'm Matt Miller here in Berlin alongside Kailey Leinz in New York, Anna Edwards in London. And we really got a rally on today in terms of risk assets. The main reason for that, or the spark for this fire, has been the triple R cut out of China, the required reserve ratios. They've come down for big banks, for small banks, for rural commercial banks, as China, as the PRC, attempts to support the economy. Doesn't look like they need to, since their exports and imports were on fire as well. But in any case, this has really caused a big take up in assets, not only in Asia, but here in Europe and in futures in the U.S. Christine Aquino helps lead our market coverage out of London for us, and she joins us now. Christine, is China looking to really support the economy after they pulled back with their clampdown on big tech?
Well, Matt, I think it seems to be heading that way. And I think the key takeaway from China is not just they cut the triple R ratio, right? I mean, that's one aspect of their policy. But I think really it's the more holistic focus on maintaining macroeconomic stability. And I think investors and traders are really honing in on that aspect and that tone from the Chinese government and the PBOC as an indication that China really wants to support the economy from a broad-based perspective. And so I think we're seeing indications in Chinese markets today, for instance, that there could be potentially more action down the line. I mean, China has a bunch of policy options, as we know. It's not just a triple R that they have in their arsenal. And so investors are really keeping the faith that they're going to be supporting the economy more broadly moving forward.
Good morning to you, Christine. It seems that a number of news lines coming out of China also helping to support the iron ore prices, helping to support basic resources, basic resource stocks, one of the best performers here in Europe, then this morning. Iron ore prices up by 7.9%. This is not something that moves, though, generally always in line with the rest of the commodities space, which tells a different story.
Absolutely, Anna. And I think this is very much a reaction to what we're seeing out of China, right? Given that China is the world's biggest commodity consumer still. And I think, what we've seen in iron ore is very much a reaction to measures that we've seen in the property sector specifically, because that is a big part of the market that is using these raw materials, iron ore specifically. And so the fact that we're seeing these measures now being put forward by the Chinese government is really causing that much of a reaction in iron ore.
Yeah, hopes and expectations that perhaps a few more of those apartments will get built in China then, and that's lifting some of those basic resources. Christine, thanks very much for joining us. Bloomberg's Christine Aquino with us live on set in London. And for more market analysis, check out MLIV Go. That is the function to use to get all of the analysis from the Markets Live team on your terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Anna Edwards in London and Matt Miller in Berlin. Now let's get the first word news. And China is warning the U.S. it will pay a price for its diplomatic boycott of the Winter Olympics. The Biden administration has decided not to send any officials to February's games in Beijing. China's foreign ministry says the Olympics are not a stage for political stances or manipulation. The United Arab Emirates wants to bring itself more in line with the rest of the world. So starting on New Year's Day, the UAE will switch its weekend to Saturday and Sunday for government entities. There will now be a 4.5-day work week. Friday, which is a holy day in Islam, will be a half day. No word on how this will affect the private sector. Republican Congressman Devin Nunes of California is quitting Congress to head up Donald Trump's new media startup. Nunes is a fervent supporter of the former president. He possibly faced a tougher path to re-election next year. Draft maps by the state's redistricting commission showed Nunes' district becoming more Democratic. And the world's richest person is blasting President Biden's tax and spending bill. Tesla CEO Elon Musk says the Build Back Better package should be defeated because it would add to the country's budget deficit. Tesla would benefit, though, from the bill, which includes funding for electric vehicle charging stations. But Musk told a Wall Street Journal conference he's in favor of dropping all federal subsidies. So he said that doesn't just apply to electric cars, Anna. He's also talking about oil and gas.
Right. Okay, yeah, so he weighed in on that, and you can see how that crosses over with his business interests, but he also weighed in on a whole load of other things. He talked about China, which I thought was interesting. The China economy will one day be 2 to 3 times the size of the United States, and I said it was wide-ranging. He also says he doesn't think that dropping acid makes you age less, so it was a fairly wide-ranging conversation with Elon Musk. Certainly, I agree with him. We're headed for an interesting and different world. Well, based on his contributions there, I'd say we are then. Matt, what caught your eye?
Well, taking acid, taking too much acid, let's say, probably not good for you, or smoking too much weed, as I think they were talking about. What caught my eye really is the Trump-Nunez thing. I mean, the fact that a sitting congressman is going to leave office in order to run this, entertainment, social media entity, I think is really fascinating, and I wonder what they're going to do. The SPAC that merged with this Trump media group, DWAC, I think is the ticker for that, soared from like $12 to $100 in just a couple of trading sessions. It's back down in the 40s right now, but I'll definitely be watching it closely.
We will. We'll watch all the politics. We'll also keep an eye on the markets. As we've been saying all through this program so far, we've got a real risk-on feeling for these markets this morning, certainly here in Europe. Buying that dip once again, that was the narrative of yesterday, continued to do that. We will put questions around these markets to Kokou Agbo-Bloua of Societe Generale. I spoke to a guest earlier who says you don't have to worry about Omicron and worry about Fed tightening because you just won't get both of those developing in a serious fashion at the same time. We'll ask Kokou what he thinks. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in Berlin and Kailey Leinz in New York. And Matt, we see a day where markets once again putting aside any concerns they might have about new variants, also putting aside concerns about tightening policy from central banks globally, and focusing instead on buying that dip and doing so in some style.
Yeah, I can't believe markets have really been that concerned about the new variant, with the exception of the Friday after Thanksgiving when we saw light volume. But ever since then, we've had indications that Omicron is causing mild disease, even if it's more transmissible. Of course, we have to wait until all the data comes in before we commit to that. But investors certainly have been. To me, it seems like the Powell pivot was a much bigger deal for this market. And it's interesting to see them set that aside today, as well as the geopolitical issues that we've been talking about between the U.S. and Russia as Putin amasses troops on the Ukrainian border. It doesn't seem like the West has much to do in order to respond. Clearly, we're reliant here in Berlin, in Germany, on Putin's gas. It's not like Germany can do anything about it. And the U.S. doesn't want to get involved in such a serious conflict. So, we'll watch as they maybe clamp down on banking regulations and stop currency conversions, but what really can they do?
And apply some sanctions there, perhaps, if this were to come to pass. And of course, we'll focus on that meeting taking place a little bit later. Kailey, it isn't just risk appetite for stocks, though. We're seeing commodities on the move, another day of rebound for oil prices, for example. What are you watching ahead of the US Open?
Yeah, there's a lot of green on the screen. In addition to what's going on in the commodity complex, what's going on in tech is particularly remarkable this morning. It is tech that is leading the Stock 600 on a sector basis this morning. That tech index is now up almost 4 percentage points, heading for its best day since April of 2020. And that rebound is evident as well when it comes to Nasdaq Futures here in the U.S. They're up 1.7%, outperforming futures for some of the other benchmarks. In the bond market, the 10-year yield has now taken a round trip to where we were pre-jobs report. Of course, on Friday, we saw a 10 basis move upward on the 10-year yield. It was down 9 basis points yesterday. Reverse those. 10 basis points in on Friday, 9 basis points up yesterday, and another basis point up this morning. So we're back at 144 where we were last Thursday. And then Anna was talking about the rebound in the commodity complex. WTI crude up another 3% today after a 5% move yesterday. We are heading for the best 2 days since August. And as a result, WTI crude is now back above $71 a barrel, trading at $71.59. And as for some of the individual tech movers to watch this morning, a lot of movement going on before the bell. Intel is up about 8%. Of course, this is on plans to take its Mobileye self-driving unit public next year. You also have NVIDIA and Microsoft moving to the upside by about 3.3 and 2% respectively. And then, of course, Tesla was dangerously close to closing in a bear market yesterday, but a little bit of dip buying happening this morning, trying to snap a 4-day losing streak. That stuck up 3.3% before the bell, Matt.
All right, I'm watching a basket of profitless tech stocks. Our producer in London, Daniel Curtis, has found me this interesting basket here in white, and I'll welcome our listeners on Bloomberg Radio and walk you through what I'm showing here. In blue, I've got the 10-year Treasury yield, and over the past couple of years, when the Treasury yield comes down, that's good for these profitless tech stocks. They can make more money. They can do better in that environment. Now we've seen, as Kailey was just talking about, a real drop in yields. Okay, a little bit of a bounce back yesterday, but in general, the trend is off from almost 1.7% down to 1.45, and it hasn't helped this basket of tech stocks. The question is, will investors, especially retail investors, come in and save the day as they buy the dip? Certainly, we've seen dip buying happen in Asia and in Europe. Kokou Agbo-Bloua joins us, head of UK research at Soc Gen now, to talk about what's happening in this rally. Does this continue to reverberate around the world, Kokou? Do we see these traders bidding up the market and the turmoil that we saw of the last week, leaving that in the rearview mirror?
Yeah, I think it's important to take a step back and realize that we are still in a decent growth environment. So most economies in the developed countries are going to grow between 5 and 6% this year in terms of real GDP. And then you have an additional, 2, 3, 4% of inflation. So nominal growth is really around 8%. And this is also an environment where you have huge amount of cash sitting on household balance sheet, but also corporate balance sheet. So we talked about the $2.5 trillion of cumulative excess savings in the US alone. That's roughly 11% of GDP. That money is being used in revenge spending to some extent, but also back into in the market. So some of the data we're monitoring is that we're noticing retail investors looking to buy the dip, because this has been a strategy that's been highly profitable over the past few years. And the Omicron variant really creates uncertainty, but it doesn't really change the story. And as a result, we think that momentum will carry on through strong earnings and strong equity performance.
Okay, so those strong balance sheets for individuals and corporates certainly helpful here then, Kokou, and we certainly see risk appetite on display in these markets here in Europe, up by more than 1.8% on the Stoxx 600 right now. If we were to think about headwinds, though, tell me about how you're weighing up the headwinds of Omicron versus a tighter Fed policy, because one guest told me earlier, look, you don't have to worry about both, because if you get Omicron becoming a real market event or a public health event and then a market event, then that would mean that the Fed would have to pause. Would it be that simple, though? Because if inflation continued to be generated, would the Fed have to move anyway?
Well, this is a brilliant point. So we think that if inflation continues to be not transitory, but a lot more temporary, a lot more persistent and permanent than warranted, clearly the tightening is going to be a lot more aggressive. And I think the Fed pivot, or the Powell pivot, is very similar to what we saw end of 2018. It was actually the other way. The Fed was tightening, and then they pivoted by having a lot more smoother and easy policy. So here, clearly, the Fed is uncomfortable with the level of inflation, but it is a very interesting point, the balancing act between the Omicron that's clearly going to tame some of that demand to some extent, although you could see supply chain disruption if we were to go in another lockdown, creating more goods inflation. But net, our view is that inflation is most likely to be transitory, and that you can already see that with natural gas prices coming off quite hard. And we will see a base effect that will get us into an environment where inflation will be more reasonable into next year.
So, Kokou, the Fed's not the only central bank that has to make a decision next week. The BOE does as well. Do you think Omicron gives them some cover to not make a move this month?
I think it clearly does, and I think they've mentioned a concern around Omicron is something they're monitoring. I think the move is likely to be in Q1 next year, because if you look at the level of inflation in the UK, it's clearly worrying, and I think this is some of the consequence linked to Brexit in terms of shortage of labor. So clearly, I think the path for tighter policy is clearly likely to be very significant into Q1 next year.
But of course, being the head of UK research at Soc Gen doesn't mean you only look at the UK. You're the head of research for the entire British Empire in terms of Soc Gen. Do you see global rates rising around the world into 2022, Kokou?
I think we will see tighter policy for sure in the short end of the curve. When it comes to long-term yield, the jury is still out there, because we have massive inflows on the one hand, but also the risk of a sort of recession or slowdown should these tighter policy stop the momentum we've seen thus far. But generally speaking, given the level of growth and momentum and the level of inflation, I think that yields should be higher into next year.
Okay, interesting place to leave it. Thanks, Kokou. Interesting to see what rate hikes will do to growth expectations further out. Kokou Agbo-Bloua, Societe Generale, head of UK research. Thank you so much for joining us today. Now, coming up on the programme, the threat of sanctions. We'll discuss Biden's diplomacy next with Julie Norman, lecturer in politics and international relations at University College London. We'll discuss that meeting ahead with Russia. We'll also discuss tension related to the Olympics with China. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Ryan Lance, ConocoPhillips CEO. That conversation at 10:30 a.m. Eastern, 3:30 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Anna Edwards in London and Matt Miller in Berlin. Well, the U.S. and Europe are considering tough financial sanctions against Russia if Vladimir Putin invades Ukraine. Bloomberg has learned that Russia's largest banks would be targeted, along with the country's ability to convert rubles into dollars and other currencies. Now, President Biden may spell out those sanctions today when he and Putin have a video call. Russia has denied that it plans to attack Ukraine. Joining us now is Julie Norman, lecturer in politics and international relations at University College London. Julie, the Kremlin has tried to say that they don't really expect anything to come out of this phone call. Is the Biden administration going to be able to accomplish something tangible here?
Well, Kailey, the main purpose of the call is simply to cool tensions and really to clarify the intentions around Ukraine. The administration isn't certain that Putin is planning an invasion, but they do know that he's well poised to do so if he so chooses. There's currently an estimated 100,000 Russian troops along different parts of the Ukraine border. So what Biden's going to be looking to do is get some kind of commitment from Russia to draw down those troop levels. And Putin, meanwhile, will be trying to get some kind of commitment or indication from the U.S. that the Ukraine will not be admitted into NATO anytime soon, which is one of their key concerns. Importantly, Biden spoke with European allies yesterday, has a pretty solid front on a sense of responses that would mostly take the forms of financial sanctions, as you mentioned, bank restrictions, shutting out of SWIFT, and really trying to focus on the economic impacts.
But are those sanctions enough to move the dial on the risk calculus for Russia, or does use of force have to be on the table here?
Well, that's a question because in reality, both Putin and Biden know that the U.S. is not committing to military direct support in Ukraine. Even if there was an invasion, that has not been something that's directly on the table. So what Biden has to do is convince Putin that these economic sanctions would be impactful enough and would have such an impactful effect on the Russian economy and on the Russian people that it wouldn't be worth Putin's risk of invading Ukraine anytime soon.
Just in case anyone was wondering, Robert Habeck from the Greens here said Germany also should strive for a diplomatic solution to this issue. Is that even possible, Julie, with Germany's reliance on Russian gas?
Well, Matt, that's a huge question right now, and that's why it was so important that Biden had those conversations yesterday with European allies. Germany in particular obviously has been in long negotiations with Russia around the Nord Stream pipeline, and Europe more broadly is going to be very reliant on Russian gas, especially going into what we already expect to be a pretty tough winter in terms of energy capacity. So some are questioning if Russia would actually be trying to exploit this moment with European dependence, also with the German government currently in transition, with French elections coming up next year, and really trying to exploit this moment of relative weakness, if you will, in Europe. So that's definitely part of the calculation.
Julie, good morning. It's Anna in London. In terms of the geopolitical agenda of the Biden administration, we're also seeing them taking a fairly tough stance with China when it comes to the Winter Olympics taking place in February next year. What do you see as the diplomatic aims of this? Because to take such a prominent and high-profile decision as to bring about a diplomatic boycott of this big sporting event, is that going to drive any change in China? What would a success look like in terms of the aims of this kind of policy?
Well, the administration has been discussing this option of the diplomatic boycott for several months, and this decision today is one that really reflects bipartisan support on this issue. Again, this is really trying to target specific human rights abuses in China, especially the targeting of the Uyghur minority in Xinjiang province and also the crackdown in Hong Kong. So it's important for the Biden administration to have some credibility on human rights issues. This administration, as well as the Trump administration, identified what was happening to the Uyghur community as genocide. So there's a credibility issue here for Biden to be projecting the U.S. on a leader of democracy, pushing back on authoritarianism, and upholding human rights to make this move. With that said, these kinds of symbolic movements, really what they are, don't usually impact people on the ground. There's probably not going to be a great change of China's policy internally. But what it does do is send a different message externally and hurts the kind of image that Beijing is trying to project right now.
We are going to see later on this week, of course, President Biden leading that democracy summit. And I wonder if this maybe all is in the run-up to that. How significant can that be, Julie? Is this just an opportunity for some like-minded countries to get together and make very little material difference to the world? Or can this be something quite substantial?
Well, and I think these movements that we see this week on Russia and China are certainly part of this build up to Thursday. And the Democracy Summit is going to be a gathering of over 100 world leaders, as well as private sector and civil society leaders, to kind of start these conversations around how to bolster democracy against threats from authoritarianism, also how to push back and defend against corruption, and again, to promote human rights. These sound like quite lofty ideals, and perhaps they are. The Biden administration, I think, is just trying to get conversations started on these issues. There's a plan to have another summit like this next year with different regions and kind of countries working on this. But this is all part of Biden's larger foreign policy agenda of trying to frame his promotion and defense of democracy against what he and some allies see as authoritarian threats. So there's different views on if that's an appropriate framing or not, but it's the way the administration so far has framed their foreign policy.
Julie, thanks very much. Thanks for joining us. Julie Norman of University College here in London with her perspective on some of the geopolitics that we're seeing play out this week. Coming up on this programme, cutting equity exposure, why investor Dennis Gartman says a bear market is required. This is Bloomberg.
Expansion for a long period of time, and I think over the course of next year, he or she who loses the least amount of money will be the winner.
Dennis Gartman, University of Akron Endowment Chairman and former publisher of the Gartman Letter, talking on the stock market on Bloomberg Radio. And joining us now is Tom Keene, co-anchor of Bloomberg Surveillance, who is always talking about the stock market. And Tom, volatility, it recedes.
Well, volatility recedes, but it's been very, very volatile, particularly compared to the drug of the last 4, 5, 6 years of a great bull market. We've shown this chart way too much, but it is the clearest look at the dynamics of volatility here, and it's a VIX that's come in and comes in again this morning, almost 4 points down to 23.53. That's really something. The nirvana of 5, 6, 7 days ago, up we go with all sorts of fear and angst. And the big green arrow down is real simply the goodness of a better stock market. We saw that yesterday, and we continue to see it today. Maybe we get back to fear. To me, it's a break at 20, Matt. When we get to 19 handle, that gets my attention. We're not there yet.
We are seeing a lot of strength here in Europe. Good morning to you, Tom. Thinking about where the VIX goes next, though, maybe we get some more volatility if Dennis Gartman is correct. We just played a little bit of what he was saying there, but he's been saying that stocks need a pullback, especially growth stocks. But actually, we've seen some of those high growth stocks pulling back a little bit. The likes of Meta, Facebook, the likes of Tesla. Some of them have pulled back a little bit from those recent highs.
Well, a lot of people have noticed no breadth in the market. The Gartman letter was hugely valuable. I lobby Gartman and on about every 6-week basis to come out of retirement, get off the golf course, and at least generate 4 pages a day. The reality is, and Dennis knows this, it is extremely difficult not lose money given volatility. This is not about making money. It's how do I not lose money? That's tough to do.
I love Nick Colas of Data Trek, not least because he rides a Ducati Sport Classic. He says he's waiting for the VIX to hit at least 36, possibly 44 before getting in. And he says that's not really a warning longer term because he's still bullish the market, but he says we need to shake this out.
Yeah, the word there I use is catharsis. That's actually a word that's used within the financial education, and the catharsis gets you out way above 30, out to 36 or so, and we're just not there. You don't see it. We can pontificate all day about why that is. The fact is we have not had a bull market catharsis that signals some form of reversal.
All right, Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much. And speaking of the bull market, we are seeing stocks now right around session highs. The Stock 600 in Europe up 2%, and Nasdaq 100 futures here in the U.S. up about 2% as well, with about 3.5 hours to go until the opening bell. Now a look at what else we're watching, and I, of course, am watching geopolitics with that call between President Biden and Russian President Vladimir Putin happening later on today. Of course, the backdrop to this is escalating tensions over Ukraine, with U.S. intelligence suggesting 175,000 Russian troops could be ready to invade Ukraine in the coming year. So the question really is, can President Biden de-escalate this situation? Is the threat of sanctions from the U.S. and its Western allies going to be enough here? Or can President Biden really accomplish something here? Of course, this is the 4th phone call between Biden and Putin since Biden took office last January. But it doesn't really seem, Matt, like the relationship with Russia is getting any easier or more functional.
No, not at all. It's definitely a challenge that the Biden administration is going to have to deal with probably for a long time. I'm watching another Bloomberg Radio interview, really hitting it out of the park. Bloomberg Radio has a program, a Bay State business program that's going to be broadcast later today. Peter Lynch, ultra famous investor on Bay State Business on Bloomberg Radio today, talking about passive versus active. He says, don't go passive. His active guys at Fidelity Magellan have been beating the market for years. And of course, he, in his storied career, he retired at 46 and he's 77 now, beat the market, I think 13 years in a row. He produced an annualized return of 29%. That's why people look up to him. But this is becoming a big debate again, especially as we get the big take story yesterday was fantastic about these new ETFs that you can mold yourself, and people are all talking about social investing and getting away from the old Vanguard kind of Jack Bogle passive lesson. Time and time again, it seems to me that the market has to learn this, but maybe we're there again.
Yeah, that big take story of yesterday, Matt, a really good one to read by Justina Lee, talking about this mashup then between the passive and the active. I'm watching what's going on in China when it comes to Evergrande. We talked about the property sector in China, some actually better mood music around that over the last 24 hours for the sector as a whole, but for Evergrande, not so much. We still see bondholders not being paid, bondholders yet to be paid after a grace period ended. That lasted around 30 days. It has come to an end. So this business now on the brink of default. $82.5 million worth of coupons were due. Total liabilities of more than $300 billion US. That was back in June. So preparations here being made for one of China's largest ever debt restructurings. And the question still around this is how well can this be handled? How well and smoothly can this be dealt with? Can this be done then, Matt, without huge impact on the rest of the Chinese property sector and indeed into the rest of the global economy?
You're going to be watching this for a long time.
Oh, we're certainly watching that for a very, very long time. Right, Bloomberg Surveillance is ahead. We'll hear from Liz Ann Saunders of Charles Schwab, Ed Yardini also joining the programme of Yardini Research, among others. Stay tuned as we track these markets heading higher. Nasdaq Futures at 1.9% right now. This is Bloomberg.